Ever wonder if your investment strategy is setting you up for success or failure? Have you been questioning if your financial game plan is a winning one? You see, the importance of having a clear, well-thought-out investment strategy cannot be overstated. It's like a compass guiding you through the uncertain sea of financial markets, helping you navigate the waves of risk and return. There are numerous strategies out there, each with its own merits and demerits. From aggressive to conservative, high risk to low risk, short term to long term, the list goes on. But today we're going to focus on one particular strategy that could be your safety net in the volatile world of investments: the conservative investment strategy. A conservative investment strategy may sound less exciting than its high-risk counterparts, but don't be fooled. Its potential for steady growth and preservation of your hard-earned capital is truly something to marvel at, so stay tuned as we dive deep into the conservative investment strategy and how it could be your ticket to financial stability. So, what exactly is the conservative investment strategy? Well, it's all about approaching the financial markets with caution and focus. While it may not be as thrilling as a high-risk, high-reward strategy, the conservative investment strategy is all about preserving your capital and minimizing risk. It's a long-term game, not a quick win, but it's a game that can lead to consistent, steady returns over time. Imagine you're a tightrope walker. A conservative investment strategy is like using a safety net. Sure, you might not be making the daring leaps that could lead to a huge applause, but you're also far less likely to take a detrimental fall. Now let's dive a little deeper into how this strategy works. A conservative investment strategy typically involves a mix of low-risk investments. This could include government or corporate bonds, high-quality stocks, or blue-chip stocks. These are all considered stable investments that are less likely to be affected by market volatility. Government and corporate bonds are essentially loans that you're giving to the government or a corporation. In return, they promise to pay you back with interest. The risk is relatively low because it's unlikely that a stable government or large corporation will default on their loans. High-quality stocks, on the other hand, are shares in companies that have a history of stability and reliable performance. These companies often have strong financials, a solid track record, and are typically industry leaders. They're not immune to market fluctuations, but they're generally more resilient than their riskier counterparts. Blue-chip stocks, named after the highest value chips in poker, are shares in large, nationally recognized companies with a history of stable earnings. These are the juggernauts of the business world, the companies that have stood the test of time. They're the type of companies that can weather economic downturns and come out the other side still standing. So, to sum up, a conservative investment strategy is all about minimizing risk and preserving capital. It's about making careful, calculated investment decisions and choosing stability over speculation. It's the slow and steady approach to investing, but as the old saying goes, slow and steady wins the race. That's the conservative investment strategy in a nutshell. Let's unpack how to implement it in your investment portfolio. Scene script. Ready to shift gears and adopt a conservative investment strategy? Here's how. First off, it's important to underline that a conservative investment strategy is all about minimizing risk. This strategy is typically adopted by those who prioritize safety over high returns or those nearing retirement. Now let's break down the process into 5 easy-to-follow steps. Step 1. Understand your risk tolerance. This is fundamental. It's about assessing how much financial risk you're comfortable with. Are you okay with short-term losses for potential long-term gains? Or do you prefer steady, smaller returns? Your answers will help define your investment approach. Step 2. Diversification. You've probably heard the saying, "Don't put all your eggs in one basket." Well, this old adage holds true in investing. Spreading your investments across various asset classes can mitigate risk. This means investing in a mix of stocks, bonds, and other asset types. The exact mix should be tailored to your specific risk tolerance and financial goals. Step 3. Choose high-quality stocks. If you're including stocks in your portfolio, opt for those with a history of stable earnings and strong financial health. Typically, these are large, well-established companies. They may not offer the highest returns, but they're less likely to be affected by market volatility. Step 4. Invest in bonds and other low-risk assets. Bonds, particularly government and corporate bonds, are a staple of conservative investment strategies. They provide regular interest payments and return the principal amount at maturity. Other low-risk assets include money market funds and certificates of deposit. Step 5. Regularly review and adjust your portfolio. The market is dynamic and your portfolio should be too. Regular reviews will help you assess if your investments are performing as expected. If they're not, don't hesitate to make adjustments. This could mean rebalancing your asset allocation or swapping out underperforming investments. Now, while these steps provide a general guide, it's important to note that implementing a conservative investment strategy is not a one-size-fits-all process. It should be tailored to your unique financial situation and goals. It's also worth mentioning that patience is key. Conservative investing is a long-term game. It's about steady growth and capital preservation, not quick gains. So don't be disheartened if you don't see immediate results. And lastly, don't shy away from seeking professional advice. A financial advisor can provide personalized guidance and help you navigate the complexities of the investment world. So there you have it. 5 steps to implementing a conservative investment strategy. Remember, it's about understanding your risk tolerance, diversifying your portfolio, choosing quality stocks, investing in low-risk assets, and regularly reviewing and adjusting your portfolio. Implementing a conservative investment strategy might seem daunting, but with these steps, you're well on your way to a more secure financial future. Let's recap the key points about the conservative investment strategy. This strategy is a financial game plan designed for those who prefer to tread carefully in the world of investments. It's for those who wish to see their capital grow, but not at the cost of sleepless nights worrying about market volatility. A conservative investment strategy revolves around 3 core principles. Firstly, it emphasizes capital preservation. This means that the primary goal is not necessarily to dramatically increase your wealth, but rather to ensure that the money you have invested does not diminish. Secondly, this strategy is all about minimizing risk. Conservative investors opt for lower-risk investments that are more likely to yield steady, albeit smaller, returns over time. They steer clear of risky ventures that promise high returns, but come with a high likelihood of loss. In other words, they are more tortoise than hare in the race of investments. Thirdly, a conservative investment strategy involves diversification. This means spreading your investments across a variety of asset classes to further reduce risk. By not putting all your eggs in one basket, you increase the likelihood that at least some of your investments will perform well, even if others don't. Implementing a conservative investment strategy involves careful planning and regular monitoring. It starts with defining your financial goals and risk tolerance, followed by selecting appropriate investment vehicles such as bonds, money market funds, or blue-chip stocks. Once you've set up your investment portfolio, it's crucial to regularly review and adjust it as needed to ensure it aligns with your goals and market conditions. And the most important thing to remember about this strategy? Patience is key. A conservative investment strategy is a marathon, not a sprint. It's about building wealth gradually and steadily over the long term, not chasing after quick, potentially risky gains. Remember, a conservative investment strategy isn't about making quick bucks. It's about long-term financial stability and peace of mind. So, are you ready to take the leap and adopt a conservative investment strategy? This brings us to the end of our journey, yet it's just the beginning for you. As we've explored, a conservative investment strategy can be a steady and reliable approach to growing your wealth over time. It's crucial to remember this strategy isn't about quick wins or overnight success. It's about long-term commitment, patience, and understanding the ebb and flow of the market. Every financial decision you make should align with your personal goals and risk tolerance. It's not about keeping up with the Joneses, it's about what works for you. So take some time to reflect. Is a conservative strategy the right fit for your investment portfolio? Investing isn't a sprint, it's a marathon. And the most important thing is that you keep moving forward at your own pace. That's a wrap on the conservative investment strategy. Thank you for tuning in, and remember, your financial future is in your hands.